Welcome to the Real Estate Show on KMED. March the 25th is our date. Pete Belcaster and Joe Brett, the real estate guys, with you. We're both real estate brokers with John L. Scott in Southern Oregon, and we get together with you once a week here on KMED to talk about all sorts of real estate-related issues and topics. And, you know, through 8 years of this, we haven't run out of things to share with you about this amazing real estate market that when we started was at the doldrums. It was at the bottom, Joe. And here we are, this thing just rolling along at historic low inventory levels, which is really kind of gumming up the whole market because there is a lot of demand, certainly still out there across all specters, all price ranges is what we're seeing, isn't it? It's amazing.
And I've seen some new listings coming out this week. I've seen some hope at least that
but not
some new properties. We need a bunch.
It's below normal still.
It's a great time if you're considering selling your property and making a move of any sort. That's a great time to consider that right now.
Well, certainly values are up and things like that, so it remains that seller's market that we know. There's a couple of things before we get going. There's Realtor Day at the Capitol coming up on April the 12th, which is a time when those issues before the legislature kind of come up there. Just give you one of the latest things that they're talking about doing is giving you its support for Oregon First-Time Homebuyer Savings Program. You can save up to $50,000 tax-free income. And then you can use that to buy a first-time home. It's one of those, the craziest one of all. In Brad Bennington,
then they're going to turn around and take the interest mortgage deduction away.
And I know that Brad Bennington is going to love this one. This is happening in Portland, you know. And what they're doing, remember, on the first of the year, all commercial buildings 20,000 square feet or larger in the city of Portland must track their energy use, okay, and report that energy performance information to the city of Portland every April. And that is coming our way. It's also coming into homes our way. I just want you to hear you've heard that first here because it is going to. I think it's going to happen. The legislature may do it this year before they even adjourn.
Do you just email that report to the Speaker of the House?
I don't know. But anyway, that's out there. And next week, by the way, Rogue Valley Association of Realtors, our show, we're going to be talking about some of those issues that are up there facing the legislature that they're dealing with. And so because they all affect us. I mean, they're going to affect the market. They'll affect buyers, sellers, renters, investors, whatever. As you know, a lot of rent control issues, things like that going on. Anyway, Guy Giles is in the house. Guy's our resident mortgage expert from Bank 34 Mortgage. Well, it's been, a few weeks since we've talked to you, and once again, we saw an interest rate rise and that kind of thing. So tell us what's going on in your world lately.
I can go there. There's definitely a lot going on as far as mortgage rates these days. One of the things, if there's anybody listening other than my mom to me on the radio, if you're a real estate agent, please try to make it up to that day at the day in Salem, because that's our chance to go up there and get our voices heard. Otherwise, there'll be a bunch of people from other places with their own interests up there, and it's just we gotta support our local real estate industry down here. So
I went to that thing last year, and I was about 1,000. Real estate brokers there. It was an interesting thing. You go to this big rally and they tell you all these issues. Then you go to the state capitol and you meet people and you kind of thing. It's it's good to show. I guess you so support. People do that all the time, don't they? In Salem, it's one of those things. They get used to that. Every day is somebody else. Some of their group is up there.
Down at Rogue Valley Community Television, we stream legislative committee hearings in the mornings, the House and Senate sessions at 11 when they convene in the afternoons as well. Nice. I read over a lot of the agendas as well.
There's a lot going on this time of the year. Absolutely.
It's staggering the amount of things that they try to take on in the different directions of things that are under the influence of our government. It's really behooving of a citizen to check into that and know what's going on.
So back to the interest rate thing. Tell us what you're doing this week. What are you telling people? What are you quoting around the thing?
I think the big thing is, a lot of people were panicking right around the time the Fed was going to meet. Generally what happens is they give us a little window. They're always giving out little hints and little ideas before they actually meet and before they release any statements. So we kind of knew beforehand that was going to happen, and they've already given us a glimpse that they're going to do at least a couple more rate hikes before the end of the year. So when that day actually hit, I ended up being able to take a couple of deals that were on the fence going with me or going with somebody else, because they told them, you better lock today the day before the Fed talked and raised rates. And I said, you know what, let's just give it a day. I mean, I don't have a crystal ball, but you get around long enough, we watch these things. And rates actually dropped on the day that they did it, and they've been dropping a little bit ever since the Fed raised rates. And again, they'll come in and they'll say that it's going to happen, and everybody will it'll just kind of get baked into the rates a couple of weeks before, and so we didn't get in a panic to lock, and consequently we were able to help some
You
people.
said last time that you were you were backed up with some things, didn't you? I can't remember loans you were doing. Tell me here, Joe. I'm trying to think of.
I think just transaction times we were talking about. The appraiser delays that have come in, and the closing times are, can be out to 45, 60 days pretty regularly.
I'm definitely not asking for any more than 45 days. I think that, on VA loans, we can actually go a little bit quicker than that. That's one thing. A lot of people shy away from VAs a little bit, or accepting VA offers because, if you have some peeling pain, or, they could tend to call out something a little bit more, but there's a lot of misinformation out there that if you have a VA loan, that the veteran can't pay any of the closing costs, so the seller's going to be responsible for that, and that's not the case. As long as we don't charge them that 1% fee for, a one-time upfront fee, then there's a pest inspection, and that's really the only thing that they can't pay for, and that's kind of covered within the house inspection anyway. Right. So. The VA ones are actually sliding through a lot quicker, and that's probably about 70% of what I do these days.
Okay. Are you seeing people like me who have those variable rate loans? Remember those things that are still out there? Are you seeing refinancing kind of taking place when this started to move? Because mine has gone up now. It goes up, up or down every 6 months. It's gone up twice now in a row. So what's kind of going on there?
Well, to be perfectly honest, I don't do a lot of adjustable rates. I don't think that they're a bad thing if you're a good, savvy person that does understand that they can. That's not.
Thank you for that. Thank you.
Historically, they've always been lower than the regular rates. So it's not. Yeah. I don't want to ever demonize them, but I also don't want to sit across from somebody in a raising, a rate environment and say, hey, let's get you in on this lower thing, and then have to have that conversation with them 2-3 years from now. But, I do them for some people that, might, if they're not going to be in that house a long, long time, it's really not a bad option.
And yours is how old? Because yours has done pretty well for you, actually.
It has, but it's going up now, and so I got to either.
And when did you get that?
It's over 10 years, so it's 12, 13 years ago. Yeah,
interesting, yeah.
So, you can make out like a bandit on them, and especially, 3-5 years, the shorter ones, you can get some really good rates. Again, you just want to understand that thing will eventually adjust. So you want to, you'll be subject to whatever the rates are at that point. There are some caps per year that they can go up, but it's not a bad option in some places.
And where are the people who you're working with? What's going on with your clients? I mean, where are they coming from? Tell us that kind of thing, because we're sitting in here in the end of March, and we've had terrible weather. We still have, but there's still stuff going on and selling. There's a lot of pendings this week, I noticed. So tell me what's going on there.
Still a huge portion of my people come from out of town. So that's, it's still California. I was on the phone with a gal from Washington a little while ago.
Okay.
And, but there are people here moving around also. So, I'm starting to getting a fair amount of referrals from people I've already done. I don't focus a lot you ask me about that, but as far, I'll do them, but it's got to be the right circumstance, with rates going up, unless you all of a sudden have a lot of equity, which might be not a bad idea.
But you're back to your house. Where are they coming from? You said there again, they're
basically California for the most part.
Across what price range?
I tend to be about 250 to 350. Today there was a Hart guy, and he's looking at 600,000. It just about everything. Unfortunately for the people in the lower end that are looking for 200,000 and under, it's very difficult to find any kind of a house.
Well, we talk about difficulty in housing, and we talk about rentals, we talk about condos. Brad Bennington, who's the head of the home builder, was the home builders, now the Southern Oregon Builders Association, he's kind of got his fingerprints on a lot of this kind of stuff, and we still don't seem to be. First of all, welcome. It's nice to have you with us again. It doesn't seem to be getting any better. In fact, our whole situation seems to be getting worse in housing in Jackson County.
Familiar voice back in the house.
Is that true?
Yeah.
You think that's true?
Right. Well, we're limited. We've the same old sad song that I was telling you guys a year ago is still true. We still have only 40% of the skilled workforce that we had 10 years ago. But we got thrown a curveball. We have an entirely new industry in town that is consuming huge amount of conventional building resources, and it's the marijuana industry.
Explain that.
Yeah. So
consuming, you said consuming
building services.
Okay, tell me what that means.
Right, sure. Well, in the crash, what some people politely call the recession, it was a little bit worse than that for those in the building industry. But we lost half, somewhere between 50 and 60% of all our general contractors in Oregon. We lost, and we lost 60% of our skilled workforce. So and that's not coming back. That's not coming back anytime soon for reasons that we'll talk about maybe another day. So we've got a tremendous demand on the conventional side, right? We've got, you look around, you look at Northgate, you look at the commercial work that's going on, that's consuming some construction resources. You look at the tremendous demand that you see for residential construction, and our residential builders are building as fast as they can with the subcontractors that they have. But this new industry is consuming a huge amount of construction resources. They're building roads, they're building buildings, they're building fences. They're flush with cash. This is
they're flush with cash.
And
they're
the difference. And the other thing is our industry is regulated by a couple things. First of all, we have a building and planning code that we have to follow. And the Oregon legislature said marijuana cultivation is I'm doing
agriculture.
Air quotes for your it's farming.
Yeah.
So according to Oregon code, and it's always been this way, you don't need a building permit for ag construction. So they can literally build. They don't have to stop for any inspections. They don't like we build a little, then we get an inspection. We build a little, we get an inspection. They can put the pedal to the metal, and they can build as fast as their money will allow them. Mm-hmm. And I'll give you a story. It's a true story. I can't reveal the name of the contractor, but the contractor called me up and says, Brad, I really need a certain type of contractor. I can't even reveal the type because he would know. I need a certain type of contractor. Can you help me? And I said, well, what? I thought you had one of those. And he said, yeah. He said, he just called me up and said that I really feel bad doing this to you, but I've got to go work for this marijuana farm. They're paying me $40,000 a week.
Okay. All right. Yeah.
To do the work. And this guy has a $5 million backlog. Mm-hmm. He's got a $5 million backlog. And this guy, who was his guy that did this certain type of work, walked away to get paid cash working for this marijuana farm.
Mm-hmm. Well, we have $1 billion industry. We know that is come amass us.
That's how you get to the front of the line with that labor.
Right.
Is that big money, and you outpay everybody else to get their services in a tight labor market like we have.
Here's my complaint with it, Brad, is that we now, and I understand recreational marijuana as they make it as a farm unit, but now what we're doing, we're subsidizing because the water which they use on the EFU land is subsidized water, correct? I mean, by all of us. And then you have subsidized property taxes on EFU land where they pay literally zip property taxes. So we have this $1 billion industry using land and water and being subsidized. And it's not, to me, the same as growing food. I just have that.
Yeah.
I have that problem with it. But that's what's happening as well. So I didn't realize it's having such an effect, though. Did you? At this, I mean, that sounds like it's a big effect.
It is. If you're on our side, I mean, our contractors are literally...
They must be making a ton of money right now.
Well, not really, because we're still in our business. We are governed. We cannot sell a product for any more than a lender will lend. And that now we're back talking to Guy again, because lenders only lend so much money on it's a very complex formula. But the bottom line is that anything that we build, it has to justify the price. So we can't just go make a ton of money. That's not going to happen.
Well, I'm going to go get a hammer and a saw and get one of those $40,000 a week jobs for myself. Brad, you got any training courses or anything I could sign up for?
Hey, a big talented guy like you, we'll figure it out. We'll figure it out.
Does it surprise you what's happening?
No, the three of us here all predicted this years ago that this was going to happen.
I think we really have. I mean, our listeners know we've talked about this for some time.
Yeah,
the impact on our labor force is kind of a new wrinkle for sure. Yeah.
Yeah, no, we predicted this. In a healthy, normal market nationally, we build 1.2 million units a year. When we were down in the trough in 2012, we built the fewest number of new units ever on record. It was 225,000 units nationally. So we underbuilt the market for almost a decade, and now here we are.
Have you talked with anybody at Rogue Community College? The voters in this district, both counties, passed that vocational tech measure. It was the last time. Have you talked to anybody there? Because one of the things is about, getting trained workers around for the industry. Have you talked to anybody about that or that kind of thing about that?
We have, and it's a difficult discussion because if the only tool you have is a hammer, every problem looks like a nail. And we're vocational people talking to academics, and academics believe every problem can be solved by education.
Right.
So, and part of that's true, but the other part of it is along that education, you also need to know how to use a hammer and a skill saw and some other tools that they're not very familiar with. So we're still trying to have that dialogue in a way that will hopefully begin developing a little of the workforce that we need.
They're supposed to be doing that for the workforce, right? Isn't that what the purpose of this was, to train people?
You're trying to get me in trouble, Pete.
Well, okay. I just worry about that. I hope that works, because it's the only way this thing is going to even be solved if we don't do it ourselves right here in Jackson County. We got a break coming up. The Real Estate Show continues here on KMED. It's the 25th of March. Pete and Joe, the Real Estate Guys, we're coming right back right after this. The Real Estate Show rolls on KMED. It's March the 25th of 2017, final weekend of the month. Boy, March has gone by really fast. Like spring break is like over. I was like, over is coming up, isn't it? Like, isn't it now?
Next week is.
Yeah. Oh, jeez. Remember spring break? Used to go down. People used to flock down to beaches. They still do that, don't they?
Yeah, I used to play baseball in the snow.
You played baseball,
Klamath Falls, exclusively.
Yeah, it's that time of the baseball season. Going to be.
They called it spring over there, right, Brad?
Yeah. Anyway, next week
wasn't very spring-like.
Okay, next week here on the show, the Rogue Valley Association of Realtors will be talking about some of the legislative issues and bills that have been introduced up there.
That could be a 2 or a 3-hour show to cover that ground.
Maybe clearer heads would prevail, but that really isn't going to happen. And, of course, you can check out any of our past shows at realestateshowOregon.com. Today on the show, Guy Giles from Bank 34 Mortgage. He's our resident mortgage expert, is with us, along with Brad Bennington. He's the executive director of the Southern Oregon Builders Association. And we're talking new construction and those kind of things out there. And so, Guy, I mean, Joe, is there a lot going on? You see those planning commission meetings. You go to a lot of those things. Yeah. Is there, I mean, I see more construction going on now than I've seen in a long time. I will say that.
The meetings are running a little longer, and there are more items certainly coming to the table.
Is there more things coming up now? Developers, people who do some of this is coming up?
Some of it was, and I think Brad can affirm this too, some of it was just kind of pending, just kind of waiting for its time to come through. And a lot of it has been planned and platted, years before, and just kind of waiting for the conditions in the economic market to come around to where we could execute some of these plans. But the urban growth boundary process is moving forward. The regional problem solving to where the new urban growth lands are going to come into play. Not I wouldn't say soon. It's still got to go through the state processes and finish its work with the county level.
Okay, what do you think we need
but that's
mostly
going to open up some new doors.
What do you think we need mostly of? Apartments,
all of the
single-family housing in a certain price range, or what? Condos, some
multifamily residential, certainly at affordable opportunities in places that are near our schools and shopping, and we need an incredible influx of everything.
Okay, why is it so difficult to get neighbors or people to buy into this concept of, if I'm developing something, I've got X amount of these homes, X amount of this, X amount of this, to call it diversity, whatever you want to call it. It seems like that is that a way to solve some of this problem? Brad, is it affordable? Is it this? And he looks at me because he thinks that I've just become this government bureaucrat when I say that. No, I'm curious. Yeah. I mean, I don't know. I mean, it's got to be something.
So here, little bit of background on me before I answer your question. So I was there in 1972 when we created, and you were too. So you were, and so was Joe. We were there in 1972 when we created the Land Conservation Development Commission. We were also there in 1972 when the Senate created Senate Bill 100, which generated all this stuff. Matter of fact, hometown guy Fred Hurd was the Senate president last year, and he was the guy that dropped the bill.
Okay.
So we have a long history with this. I worked with this 35 years of my professional life as a commercial builder. Currently, as you fellows know, I'm the council liaison to the Jacksonville City Planning Commission. I sit on the Jackson County Planning Commission, and I also sit on the board of directors for the American Planning Association, State of Oregon. So I have a lot of experience. I have a lot of experience with this.
You
with
really
this,
do.
with this
You
planning
really do.
stuff. And what we have is we have a really unique situation that the Oregon that we grew up in has changed because we went from growing organically. In other words, people having kids having kids, their kids having kids, growing organically. We became a state that began importing its population. And so in 2014 and 15, Oregon was the most moved to state in the entire nation.
Absolutely, yes.
More people moved to Oregon
that,
than any other state.
Yeah.
And the majority of the people that move here to Southern Oregon are retiring people. Now, their needs and desires and goals are much different than some other demographics, right? So the people that are moving here from California, typically, they want a smaller but single-family detached home. They want a little bit of a yard. They want, they want a garage. They want a little bit of room around them to feel comfortable. And so that's one product that we're building, which is kind of the more what we might call traditional home. The reason that we need condos and apartments is that because our young people that live here, our young people that were born here, they do not have the financial resources to compete with our friends that are relocating here. They would like to live in single-family detached housing as well, but they just simply can't afford it. So their choice for us is we can either create housing that's more compressed, smaller, denser, that perhaps they can't afford to live, or they just have to leave, leave the area.
Are we doing that? It seems like we read about that all the time. All that is that going on?
It's slowly coming back, and this is where I remind everyone that we are not a market that is in growth. We are a market that is in recovery. We still have not recovered to where we were 11 years ago. We are still a market in recovery. And as the market recovers, and there are certain places, like if you look out there on West Main, right across the street from Bimart, there's a really nice multifamily development that's going in. It's mostly finished. Most people would look at that and say, wow, that's pretty nice. I'd like to live there. But again, the economic conditions that are allowing that to happen have really just matured. And as we move forward down the timeline, I think we're going to see more of that. But the conditions that we need to make all that happen, remember, we're in an industry that runs on borrowed money, and we can only do what the lenders allow us to do.
Mm-hmm. Well, it's the demand is still there. I don't know what, there's no solution.
The market's going to meet the greatest demand, which are those single-family detached residences.
Right.
And that's going to help the developers and the builders recover enough to where they can take on bigger projects, or take on some of the multifamily residentials, or something kind of out of the scope of just single family.
Yeah, and it's gonna, and we really need people like Guy and the lenders to be on board with this. And the lenders are beginning to have more of an appetite for multifamily that they haven't had for a very long time. But for instance, I went to a housing symposium that was sponsored by Access here about a week and a half ago, and a gentleman there, Rob Justice, who runs a not-for-profit that builds affordable housing.
Okay.
He's building all over the state. He's got a project going up in Bend right now, and he is building housing for $90,000 a door.
Mm-hmm.
And if you work the math backward on that, which is how they got there, and they're working with private lenders like Guy and others, partners, to create that. And what it works out on the consumer end is these are properties that they can rent for about $500 a month, and it is a market-based approach. They don't need one penny of government money to make it work. Wow. But it all has to be done the right way. But what Joe said is right. Most of the people that are moving here, and again, this is, we're growing mostly by migration, not by having kids. The people that are moving here, they want single-family detached housing for the most part.
Mm-hmm. No,
maybe those multifamily and some townhouse opportunities to get your first place that you actually buy and build some equity may lead our younger people and give them that first opportunity for home ownership that may lead them to their single family home, but probably not going to be attainable or affordable right off the bat. That'd be a great stepping stone to get to that place.
Now, the cheapest single family
as opposed to just
home,
renting, if you could even own your own townhome or condo, that might be a great way to start.
Okay, so the cheapest now single family detached home being built, seems like today, are right around that $300,000, $325,000 mark. I don't know how attainable that is for some people. So that's as Brad talks about those moving in, migrating in. That's a very affordable place. Absolutely,
and that's why I'm telling all my first time home buyers and the people that don't have all the means yet to buy their dream house, just get something, get in the market. Just like you were saying a minute ago, as far as build a little bit of equity. I know my first place was a single wide up on Butte Falls Highway, 30 years ago. And it wasn't necessarily...
It's probably a good place for you.
Oh, man. That's what the law said down in Medford at the time. But just get in the game. I think the national average is, believe it or not, 8% for last year. I saw some statistics today, and of course I forgot to bring them in, but things are going up at a pretty good rate. And even if you're losing a little bit on that rate right now with the rates going up, say you lose a quarter or an eighth to rate, but your place just went up 6 to 8% per year.
Right.
You're really, plus you have the tax write-off. So I would say just get in the game and buy something.
Keep that big picture in mind.
Yeah.
When you think about how much there's out there, think about all the seniors, the baby boomers who are going to need additional, are either moving out or moving through. Where are they going to go when they sell their homes? It's those kinds of places. It's the affordability that seems to be such a big issue. And Joe Volmar last week from Access says they hope to partner with local developers on some of these projects. That may be the best solution. And we'll talk about more of that with Brad Bennington and Guy Giles, the Real Estate Show here in KMED. Don't you dare go away. We're coming right back with more after this. Real Estate Show rolls on KMED. March 25th is our date. Pete Belcastro and Joe Brett, the Real Estate Guys here. And thanks for joining us on KMED all across AM and FM radio, Jackson, Josephine counties. We continue on, roll along here, heading in the second of the 3 busiest real estate months of the year, March, April, and May. We'll look at those statistics probably the next, they should be out next week, maybe the following week they'll be out for sure. We'll give you an idea if that's happening in our area right now. As we know that last week we heard again that the inventories are at the lowest level since the MLS started keeping track of those things back in the late 90s. So that just kind of gives you an idea of what the market is up against. And as you guys know, this is a supply and demand market, especially Guy Giles knows that from Bank 34 Mortgage. That just kind of dictates everything, doesn't it?
Oh, it's crazy. I did a little math on how many people that I did have pre-qualified. Is probably a little less than I thought, but it's still a ton of people that are just looking for houses. 3 on the market are probably not enough to have a good selection when you're out there trying to buy a house.
And of course, one of those documents that we get in our offices are those, the snapshot of the market, how many months supply of inventory are out there in those price categories. And geez, across Jackson County, it still is really low. If 6 months, think of it this way, if 6 months supply of inventory, those kinds of things are a normal market where buyer and seller have pretty much equal negotiating position. When you come down and it's 0.5, of a month, or 0.7 or 1, I mean, it really tilts too far to one side.
It's pretty amazing. I still get phone calls all the time about, hey, could you have a real estate agent find me some foreclosures or find me, and it's just like, you guys, I don't know where you were 5 years ago, but that's over with now. And you got to come in and go in with a really good, strong offer. And that's why I think it's imperative to have a good real estate agent that you're working with.
And tell people again the difference between pre-approval and pre-qualification, because we've heard agents tell us about that difference of making a difference in a sale.
Oh, absolutely. I'm a big proponent of just get all your documentation in, and we will get it in front of an actual underwriter at my company, and we'll get you. So if you're just pre-approved, or if you have a pre-qualification, then you could have just got online, spent a couple minutes, put in your information, and you're pre-qualified. I could be some rich person making $400,000 a year, because I just made that up.
I want the pre-approval letter, right? Because that's what's going to give to my agent, and that's what I'm going to use then when I negotiate with somebody, that I'm all ready for this loan, ready to go.
I know if I'm selling a house and I have somebody that got pre-qualified from some place online, and the difference of getting a full credit pre-approval from somebody, I'm going to look at that offer a whole lot stronger if an underwriter's actually looked at that. And again, it wasn't just maybe somebody putting in some information into a machine.
You tell people, your clients, you need the pre-approval right now. So that's what we need to do first.
And unless they come to me that day and they've already written an offer and they're just really ready to go, I say let's just take a little bit of time and get an underwriter to look at this. So we will do that.
What about construction loans? Or some within that? Are you doing some of those within this industry right now in our county?
I'm just kind of starting to dive into it. I've resisted it for a little while because it's one of those businesses that can be very, very time consuming. But I mean, we do have a VA construction loan and we have an FHA construction loan, and I've never really said it out loud again because I'll probably have to hire 2 more people if I dive into that. And I've been blessed with a lot of business, but I think I'm going to go ahead and pull the trigger on that, so to speak. Yeah. So I have access to some regular conventional construction stuff, but I don't personally do those. Yeah. But I know a couple of really good, honest people if you get to that point. All right. And you need a referral on that. But our VA one and FHA one looks like a pretty good program.
That sounds like a pretty good program. When Joe and Brad, we're sitting there talking about these building of the new construction going on, the land that's needed for these things. We haven't caught up to where we were. But it's good every time I see you and talk to you, you are optimistic that the builders around us, the people who your association, that they're working hard. They're doing they're working. There's a lot going on, but we just can't keep up, and so we're falling still further behind as we go, especially in some areas.
Right. Yeah. Well, our members represent about 80% of the capacity of our entire residential building market. And right now, as we're having this conversation, our members have over 400 units in some form of construction or another.
400. And this is in both counties right now?
In I can speak very authoritatively about Jackson County.
Okay. 400.
But yeah, our members right now have over 400 units in some form of construction or another.
Those are apartments, condos, single family units.
Right.
All price ranges kind of thing.
Right.
Okay. All
right. Yeah. All forms of housing product. And what I can tell you is that at the County Planning Commission recently approved an urban growth boundary expansion for the city of Medford.
Right.
So again, some people will say, well, the answer is infill. The answer is we got to rack them, stack them, and pack them. But you can't artificially make someone live where they don't want to live. For example, if you want urbanization, you need a healthy enough suburb to where you have some people that say, a suburb, I want to live downtown. I want to be close to services, but it has to be nice. And we have what I call the $300,000 test. Is line up 100 people, right? 100 people that just came to town, line them up, give each one of them a $300,000 budget and ask them where they want to live. Okay. And right now, out of that 100 people you just lined up, I don't think any of them are going to say, I want to live in downtown Medford. Mm-hmm. They're going to take that $300,000 and they're going to
now there may be some people who say, gosh, we're trying to get people to live downtown. We're building condos, right? We're doing all these things.
I think another funny part about that is if we could make it a little bit more like Ashland in that respect, because I have people coming to me saying, I want to live close to the plaza down there. Yeah. I mean, they'd rather be down there. So I don't know if we could do something to create. I don't know.
Well, it seems like there's combinations of those things that have to work. I mean, even from developments in neighborhoods, from, the small houses that people are wanting we're hearing a lot about that, mixed neighborhoods and mixed kinds of things. But unless you get the land available to do it or where you put it, I mean, why can't we come back down to some of these old neighborhoods that are, change them around? It seems that we can do so much more than we do.
Yeah.
But somehow we're reluctant. The government's reluctant. The city councils, or I don't know, maybe they can't do it. But we got to do better than we're doing because we're just falling behind more and more people.
Brad's going to fix all of that by the time he comes back.
Okay. Yeah. All these boards and commissions. Yeah. You probably all that stuff, man.
Well, the thing that we know is that people love Southern Oregon. They love the climate here. They love the quality of life here.
Absolutely.
The whole 9 yards. My personal opinion, I'm not speaking for anybody else but myself, but just as an old Oregon guy, what I think I see is that as our suburbs develop, somewhat naturally, then people are going to want to live closer to services downtown, and downtown will eventually, and I have a lot of hope in the Medford City Council that we have right now that they're going to make great strides at making downtown Medford more attractive.
More attractive to live, put a lot of people in. Okay, that'll do it, guys, for the show today. For Brad Bennington, Guy Giles, I'm Pete Belcastro. Have a great week, everybody. We'll see you next Saturday right back here on The Real Estate Show on KMED.
You've been listening to The Real Estate Show on KMED Radio, presented by the Rogue Valley Association of Realtors, along with John L. Scott Real Estate of Southern Oregon and Bank 34 Mortgage. For guest contact information, download our free app, or to watch a past show, visit us online at realestateshowOregon.com. This show is produced by Table Rock Productions. Join us again next weekend for Southern Oregon's one and only Real Estate Show on KMED. And thank you for making The Real Estate Show part of your weekend.